If there's anything that's more dangerous and costly to a trader, it's to believe that the markets are reliably predictable or forecastable. And as I mentioned at the opening to this lesson, is you really want to avoid forecasting and forecasters for many reasons. Number one is it's just not applicable to trading. So I'm going to talk about that a little bit. I'm going to look at a couple of markets in here and hopefully drive this point home to you. This is Bitcoin. If there's any market that's been susceptible to forecasters, it's been Bitcoin. And boy, this is the monthly data, the chart that I'm showing on here, and you're all familiar with this, even if you don't trade it. And by the way, even though I think I've commented on this in prior lessons and courses, that Bitcoin really is just an idea, a figment of someone's imagination. However, there is a market for it, and it really follows Elliott wave and the types of time and price analysis that we do, and I've taught in this course. And there is a vehicle such as the GBTC, which is an ETF, to trade this. I don't know of a safe, low-cost way to short it. I suppose you could short GBTC, but it's not like a commodity market. I know there's a lot of people that are listening to this that do trade it. And even if you don't, there's a lot of lessons to be learned from it. So let's just look at a couple of things right now and see how, instead of forecasting the future out, why it's important to recognize current conditions, probable outcomes, and the specific conditions that would set up for a specific trade. So here we are with monthly Bitcoin. And of course, boy, it's just been these crazy kind of bull trends that it has every now and then where it goes up. This is just a little one. Well, it's just up 340% in about 6 months. And then this 2020 to 2021, about 1 year up over 1,500%, et cetera. So we can look at this, and we can certainly look at this data and say, boy, this looks like a 1, 2, 3, 4, 5, just as nice as could be. And these each do break down. I've used examples of these for trading examples. They just break down nicely into impulses and countertrend sections. So let's take a look at one thing before we continue here, and that's log charts on long term. So I'm going to click log charts. It's a little bit different picture sometimes when we do a log chart. For instance, while we can see that this section made a new high, this could be looked at as a potential ABC, and maybe it's completed a contracting ABC or irregular ABC, something along those lines, as opposed to 1, 2, 3, 4, 5, and then just a 2-month decline since that top, which would certainly be a much greater correction against if this were a 5-wave trend into this top. So I've veered away and avoided more and more as the years have gone on these long-term kind of charts and wave counts. Over the years, I've really nailed some, and then there's a lot of them that have been proven incorrect. And the problem is that it's months after the fact before it confirms or invalidates the most probable wave count. So it's really not useful for traders. Traders usually are looking for anywhere from a few days to a few weeks, maybe a few months. But the longer outlook you're looking for, the further out you're looking to predict the market or forecast the market, or someone else is the less likely it is to be correct and for that person to be accurate consistently, just like with the weather. Boy, they're really good at forecasting weather a few days to a week or two out. But the further out you get is the less predictable the weather is. So the short term is always more quote unquote predictable. We're going to somewhat ignore this. And the reason I'm beginning this lesson, at least with Bitcoin, is because there's so many outrageous forecasts that are constantly being made, and they're always positive. It's always Bitcoin's about to go to $100,000 or so. Just as I was preparing this lesson, I went on YouTube, and these are all I just clipped out from today. Here's the entire crypto market will be turned upside down. Bitcoin will hit 120,000 by the end of the month. And this was actually going on live as as I'm preparing for this. And of course, Bitcoin is now at about 48,000. So this person believes that by the end of this month, at least that's what the headline implies, it's going to more than go up 100%. Come on, give me a break. Here's someone, I'm risking my life to tell you about this Bitcoin prediction for 2022. Oh my, this poor guy, he looks like someone's knocking on his door. And then here's Mr. Cheerleader. This is the bottom. Proof that Bitcoin will bounce from here, the Bitcoin chart analysis. Boy, he's a heck of a chart analysis. He looks like he's still in high school. So these are the kind of extreme, outrageous types of forecasts that you can find, and you can find them for any market. It's just they're so prevalent with Bitcoin. So to be blunt, forecasting is pretty much for suckers. And please beware, most forecasters know a lot less about markets than you do, and most don't have good intentions. I can guarantee you every one of these is selling something related to Bitcoin and Bitcoin trading. And they're not doing it with the best intentions. Let's look at this. This also I just captured off of today. This is a chart of one person's forecast for Bitcoin. They're focused on Elliott wave, but boy, this has a lot of stuff on this chart. This guy must have an engineering degree or a master's degree in chart analysis or technical analysis. It really looks complicated. And this is why a lot of people get scared away from Elliott wave, is they tend to make it look too complicated. And this is a pretty long-term forecast, but he must know what he's doing if he knows what all these numbers and lines mean on this chart. And it looks like, according to this chart, here's the forecast of beginning very soon. Maybe it's going to go a little higher for a week or so. Then it's going to have an ABC correction into, it looks like late May or June. And these are the lines to where it's going to terminate at, more than likely. And that's going to complete a contracting triangle, wave 4 triangle. And then here's how it's going to progress in the months ahead. Again, up to $100,000 after the bottom is made and this correction is complete in the next few weeks. And if you were to look at this, you'd say, I got to get ready to load up. So around end of May or June, if price happens to be around this level in here, this is going to be the trade of a lifetime. And if this is a contracting triangle, that at some point above this, what's labeled the wave C, this January or February low, is a contracting triangle is going to be complete. And then they're going to have a next big run up to a new high. Well, this could be possible, and it could be possible, of course, and that's what I can remember reading, probably 20 or 25 years ago when I first more or less started in this business. As someone who had been in the business a long time said, make a lot of predictions because now and then one will come true. And then you can use that for your promotional marketing activity for years. I don't know what this person's track record is. I'm showing this because I don't know this person, but I think this is a legitimate sort of analysis and forecast. He's doing the best he can, but this can just be so misleading, and it can look very impressive to someone who doesn't know about this type of analysis. And boy, you can go back through this and you can say, what the heck is this? This is a wave 3, and then what's this, an irregular wave A? And I mean, it's just forcing some crazy wave counts on it. So I don't mean to necessarily knock this person. This one might have best intentions, and there's forecasters out there that have good intentions. How often have they been correct when they make this kind of specific forecast? I want you to avoid that. So what we're going to do is take a look at Bitcoin. And what I'm going to do is what I did in the last few lessons, and we're going to look at it right up to date. We're going to try to see if the market itself, what it's indicating to us. Is there a trade opportunity coming up based on some Elliott wave and time and price and momentums and all that sort of thing? So here we'll go to the weekly data. And this is a fairly recent weekly data. And boy, Bitcoin off of this November high made a nice ABC correction. So We often think that once an ABC correction is complete, is that then the market should continue to a new high. We also know that a higher time frame wave A can subdivide into A, B, C. It could be a higher time frame wave A. So it's real important for us to know if this fulfilled the probable minimum time and price targets for a correction. That's one thing we'd want to look at, and that would mean we'd have to have an opinion and some sort of analysis of the trend coming up to this high. Well, what's another way, if we didn't even have that data, to indicate that this had completed a correction? Because what should follow a correction? Well, an impulsive trend should follow a correction if a correction is complete. So we can look at these past several weeks, and this is data right up through the day I'm recording this, and say, is this an impulsive trend? Because if it isn't, then this is not a completed A, B, C correction. Something else is going on, and not the beginnings of an impulsive trend to a new extreme. And what do you think of this data in here? We can reduce this data. Is this impulsive? Well, I hope that you say it certainly doesn't look impulsive. It doesn't have any typical impulsive characteristics. So what's the information we have on here that might be helpful to us? Well, number one is our weekly momentums are dual look back overbought, have been for a couple weeks. And if you have a momentum indicator that's reasonably reliable when it gets in a position from where price reversals are made, price and momentum reversals are made, and if at extremes, then you want to be alert that more than likely the Bitcoin is at or near what we call a weekly high that will be followed or should be followed by a decline lasting several weeks. Similar to back in this area, this is the last time there was a dual look back overbought period. Once it reached dual look back overbought, 2 weeks later was the price high. Back in this period of time, again, reached a dual look back overbought. It was either around 3 or 4 weeks later, made a weekly reversal, price high, bear reversal, only sideways to down for 3 weeks. But it was a warning that at least a weekly high was near, and then we'd have to look at what was the potential degree of that high. Well, in this case, since this has been going on for almost 3 months, with very minimal advance in a choppy kind of corrective pattern at any time Bitcoin were to make a weekly high, is that it has the potential for completing a correction. This being a correction, followed by a potential, then, if it is a correction, a new low below the low that was made back in this area. At least from my point of view, if we look at some very simple pattern analysis, just some basic momentum cycle analysis, not only would I not be preparing for Bitcoin to go to 120,000 by the end of this month, which would be in about 3 weeks, but I would be preparing for more of the potential of at least a weekly high, and that's a high that would be followed by a few weeks sideways to down, and the potential that this weekly high could complete a correction followed by a bear trend to below that low. So once again, it's not forecasting that to happen. It's recognizing the technical position the market is in, and that's what this entire course has been about, and what is the typical aftermath, and recognizing, is that an opportunity to take advantage of? If you know of a safe and reasonable vehicle for short trades in Bitcoin, that's what I would be focused on now. If nothing else, I would certainly not be focused on accumulating on the long side. Let's take a look at the daily data and see where it's at. So here's the daily data. Again, this was at ABC, and here's coming off of that January low. Just looking at that, Would you get excited about that being probably the beginning of an impulsive trend? It certainly could be, but it's probably not. It has a real difficult time once it makes an advance of holding on to that advance. Real significant decline here, sharp advance, and then just an immediate turnaround. And then this is a sort of orderly advance. And as of the last day on this chart, where is this market at? Well, we know the higher time frame is probably nearing a weekly high if it's not already complete. As of the last daily data on that chart, the daily momentum is oversold, probably pretty close to making a low lasting at least a few days when the daily momentum gets oversold. And it could just be for a few days. Potential for an ABC. All of these lines, this is the 50% retracement. It's the 100% alternate price projection of that decline. It's the 100% alternate price projection of that decline. So it's in an ideal position to complete an ABC correction. And what would signal that that correction is complete? Well, a close into the closing range of the wave A. Now, if that were made, then more than likely, Bitcoin would continue to a new high. That said, given the higher time frame weekly position, what would be the ramifications of a new high? Well, it would probably finish off this correction from the January low, or at least finish off a weekly trend. So it would make a high that would last several weeks. So again, might be a great trading opportunity for a few days, maybe for a week or two, but it certainly would, there's nothing here indicating that it's getting ready to have a significant bull trend to new highs, and just the opposite. From how we look at markets, it would be looking as very close to making a weekly high. How I view technical analysis is almost like being a reporter, reporting on the types of technical positions that is part of the trading plan, reporting on the potential wave pattern and what it means for the immediate position of the market and what it means for identify a probable trade opportunity, reporting on the time and the price positions, and are they those factors coming together for a potential reversal, particularly within the context of the pattern position, reporting on the dual time frame momentum position, that's very objective. It's either overbought or oversold. It's bullish or bearish. I mean, those are the only four conditions a momentum indicator can have. And it's very logical about looking for setups with dual time frame, like weekly and daily momentums in the same position. So, do we want to avoid forecasts? We really do. As we want to avoid forecasts, we want to understand the best that we can the position of the market and what that typically means. And for instance, on Bitcoin, as of today, the weight of the evidence certainly indicates that more than likely Bitcoin is near a weekly high, and given this is probably a correction, the probable outcome in the weeks ahead would be a new low. So we don't even need to do that as, or think of that as a forecast, a new low. We just have to be aware of a probable weekly high. And then as the market progresses from there, it will usually give us some pretty strong signals if a bear trend is going to continue, just as after this potential A, B, and C, the aftermath of that was not impulsive. It has not been impulsive. So again, it's indicating this is not a completed A, B, C correction. It's probably, we would look at it as an A, B, C wave A, something along those lines. And Bitcoin is probably making a wave B. That would make sense. So beware of forecasts. Focus on identifying condition with a high probability outcome, identifying trade opportunities that you can take advantage of. So let's take a look at the euro. This is the weekly data of the euro. And I trade the euro a lot, been very successful at it. And the reason I want to look at this market now, and again, we'll bring it right up to date, is because I've used examples for trade setups and trade management throughout this course with the euro. And of course, the euro is like almost every other market. It also has a bull and a bear. Well, it has a bull ETF, which is FXE. And then for bear markets, you just use the dollar ETF, the UUP. So, and a lot of people trade the Forex. I don't trade any of the other cross rates. Not saying there's any reason that you shouldn't. It's just I've been very successful with euro, so I just stick with that. Why look at 5 markets or 10 markets when you can look at one market and try to master that market? So I've used this throughout this course, and just to give you some perspective, I started this course, preparing this course a year ago. And so it's many months ago when some of these lessons were made. So it's been over the past year that I've been spending 12, 15 hours a week preparing and organizing and editing this course. So some of the examples you've seen, this is data through late January, so a few months ago. There's examples you've seen that are all through this period, through early to the middle of this past year in 2021. So I'm going to bring this a little bit up to date, and I'm going to show you how you can really be wrong about the probable position of the market, but still make money. Okay, so the trade opportunities and trade strategies are certainly more important than identifying any sort of long-term major position of a market. This is as of early June. For most of the past year, and early into this year anyway, looking at this as a probable correction against this, really clearly defined 5-wave advance off of the March low. But every time it was in a position to complete a correction, it would have this 2 to 3 week rally and then just continue impulsively to a new low. And it continued to do that into the early part of this year, to which it had reached the 62% retracement, actually a fair amount below it. And then look what happened near the end of last year. Was looking at this correctly near the end of last year as a probable correction, to which would be eventually followed by a new low. And that certainly happened in early January this year by just that 1 week. And then look at the next week. Oh boy, it turned around, snapped back up, and importantly, at least I thought at the time, closed above the closing highs of this whole corrective period and almost traded above it. I think it just came within a few pips. And if that ever looked like a washout, panic exit, and then reversal back up and to complete a wave 5, well, I've never seen anything that looked that perfect. So I was really looking at this as what's the next opportunity to go long for potential major bull trend to have completed this decline. And this was, I think, the wave count was shown at the time. Well, I'm going to advance it forward a little bit. By the way, let me show you this before continuing on. This is the Robbins Trading Company has done trading contests for almost 40 years, I think. And that's a fantastic service where people can open an account. These are real money, real-time trades over sometimes 6 months, sometimes a year. Back in 1993, I won first place in the futures trading contest that they did at the time. They only had futures contests at the time, I believe. So that's almost 30 years ago from when I'm recording this, so way back when. And then we can look at, here's some other more recent ones, 2018. This was index and interest rates. It was a little more than a 6-month contest. And I won first place, about 87%. And then that same year, I got third place in the Forex trading in 2018 with a 70%, a little over 70% return. And by the way, that was just the second year I'd ever traded Forex. I'd never traded Forex until 2017. That's another whole story. And in 2019, again, Forex trading, about 39%. I was fifth for that year. It's a year-long trade. So, not world-shaking by any means, but not too bad. Probably as good or better as most of you did. And then here is 2020. This is their derivatives contest for a year, global derivatives. And the 2020 final, again, I was fourth place with 134%. So the point is, as you know, I actually trade, and I do trade Forex a fair amount, at least the euro. So I'm pretty good at that. And sometimes I think I may be better than I am when I start doing these long-term wave counts. And so here's one more reason you're going to see why I more and more shy away from looking at long-term wave counts. So I've just added several weeks onto this. Well, oops. Certainly not a 3, 4, and a 5. So what is this? Well, this all looks like some kind of correction, and this is certainly impulsive on the way down. I wanted to show you that because I'd used this so many times, and I was just certainly convinced in the long term throughout this period that the euro was making just a major correction against this beautiful 5-wave advance. And then it certainly did not do that over time. And yet, during that time of being wrong on the long-term probable position, a wave count of the market, I really did well trading the euro because trades I'd look for a few days to a few weeks. So that's how you can be wrong on your idea of what the position of the market is, yet actually make money because of trade strategies. Trade strategies are more important, and the immediate position and outcome of the market. So let's go ahead and take a look at where the euro is right now. I'm just cleaning this chart up a bit so we can then take a look at where we're at as of the time I'm recording this. And this is what I've been doing lately with the euro, taking all these wave counts off since the January high. And that's because I don't know what this is. So we're going to do what we did with Bitcoin, is that instead of trying to forecast and identify the long-term picture of the market, let's see if we can identify the immediate position of the market and what that may mean for the longer-term position and the outcome. So that's what we're going to take a look at now. So as of this end of this first week in April, for the euro, is the weekly momentum. The relatively short look back, 8 is bullish, and the 13. And I'll tell you, this is the week ending. I'm recording this on the 8th. But I don't have Friday's data on here yet, and Friday actually isn't finished quite yet. So it looks like it's going to make a 13 momentum bull reversal, right as of the end of the day yesterday in this weekly bar anyway. Let's take a look at this and see if there's a trade opportunity and what the position of this market may be, and if there's a trade here in the next few days. Well, let's go down to the daily data and see where we're at and if there's a immediate trade opportunity or probably one coming up in the days ahead. How we look at a market, again, to look at the technical position and a potential trade opportunity. So here's the daily data, and I've actually backed it up just a couple of weeks because I want you to take a look at this and how we're looking at the market over the last 2 to 3 weeks. So as of this point in time, March 22nd, coming off of that early March low, which was just as beautiful, 5-wave decline, 1, 2, 3, 4, 5. I don't have it labeled on here, but that's what we're looking at as a 5-wave decline. And frankly, before this data, this much data was on, that once again looked like it could be a multi-month low. But Well, as we'll see, it turned out that's not likely the case. So we had this advance, correction, advance to a new high and a new closing high, just barely, but then immediately turned around and came down and closed into the range of this initial advance. For as we know now, that's a closing overlap. And that immediately signaled, more than likely, this is a correction, some part of a correction. Could even be a completion of an ABC correction. That would be a possibility. But regardless, whether it's complete or not, if the euro should continue sideways to up, it would probably be all part of a more complex correction. But that's a really important piece of data to have and information to have, that as of this point in time, more than likely, regardless of what the euro does, the advance off this low is probably part of a correction. And what happens when a correction is complete? Well, a resumption of the bear trend, in this case, to a new extreme below the March low. There was potential short-term 3 to 5 day trades within here. We call those daily trends, but always want to keep in mind that at some point in time, more than likely, the euro is going to then continue the bear trend. I'm going to add some data on. There again, correction, continued to a new high, intraday high, closing high. But so far, this is just a textbook correction with the potential of being an A, B, C, D, E. It might even be complete as of this point in time. Let me add some more data on here. So there we are. This is as of yesterday. I don't have this in this data service. I don't have it up to date as of today yet. So let's just take a look at what we got here. This is a potential A, B, C, D, E. And why do we say that? This is more than likely the euro has completed a correction, because then it's had an impulsive decline to a new swing low below this low. So this impulsive decline is very important, because if the trend has resumed to bearish, impulsive trends should all be on the downside. Just as if the higher time frame trend in this period of time, which was a correction, all of these sections would typically break down as impulses. And if we looked at the intraday data, it'd probably look pretty much like that. They're pretty much straight up for only 3 to 4 days. But what was different is now when it turned around, impulsive trend to a new low. So this is important, isn't it? The daily momentums are dual look back oversold. The euro is in a position to complete a daily low, probably within the next day or two, if it's not only complete. And when I say within the next day or two, that means probably today or tomorrow. April 8th, or today is a Friday, the 8th, or to the next trading day, which would be Monday and the 11th. Why did I just put this on? Well, of these two declines, this was a 7-day decline. And 7 days from this top is this coming Monday. That's the alternate time projection. Pretty good probability that by Monday, given that the daily momentums are low, oversold, they'll make a daily low. But what does that mean? Well, more than likely, because this is an impulsive decline, then the euro would have a corrective advance. That's what this information means. That's the probable outcome of the current position of the euro. So if you're a short-term trader, you might be looking for a long trade, but it would probably just be a 3 or 4 day corrective advance. So I don't know what's going to happen, but what I do know, if the euro makes its daily low today or Monday and begins a corrective advance, I would be looking very carefully if that corrective advance took the form of a correction, if it got in a position to complete a correction. So again, I'm not forecasting. Let's say we looked at the 240-minute data, and there was an ABC correction on the 240, a potential ABC correction, 240-minute data, would certainly look at if the euro declined below that wave A high, that would indicate that it would be in a position to have completed an ABC correction, and what would follow that, a decline to a new low. So again, the euro told us, demonstrated to us, or at least warned us during this advance that it was not the beginning of a bull trend, that was making a correction. And at some point in time when that correction was complete, more than likely the euro is going to turn around and continue to a new low. Now, it could continue in some sort of even more complex extended correction, but given this impulsive decline, more than likely that's not the case. So we can set up a scenario that, if fulfilled, it would be a trade opportunity, a specific trade opportunity. In this case, on the short side, are long the dollar index, long the UUP ETF index, and we'd probably be able to identify that and a trade opportunity with very minimum capital exposure. So once again, please avoid forecasting. Apply what you've learned to the probable position of the market, what it means, what is the typical outcome and the probable outcome from that position, and then scenarios that, if fulfilled, would then be setups for specific trade opportunities. That's what the business of trading is all about. It's not about predicting the future. In this final lesson, I'm just going to talk briefly about some ideas that will help you gain success in trading if you're new to trading, and also, I hope, help you improve your trading results if you're an experienced trader. So number one, and very important, track your progress. Now, I don't mean your P&L, but keep some sort of record or journal and review your trading activity at least once a week. Review trades to see if you identified an opportunity according to your trade plan, or if you bought or sold on fear or rumor. Was there some obvious information you missed that was critical to your decision? Was there some information you thought was more important than it truly was? I can't give you a specific format for a journal or a trade record, but you need something that helps you review your progress on a regular basis. And please, don't become a trading junkie. Believe it or not, trading becomes an addiction for some individuals who believe they have to always be in the market or constantly buying and selling many different markets. When decisions are made without reason or purpose, without a relationship to the technical position of a market, well, you've got a problem. I'm frequently asked, how many trades a week or a month or a day does your system make? Well, first of all, as you know, I don't have a system, but that's another lesson. The person who asked that is probably doomed to failure because they're more interested in activity than profitability. The frequency of trading is not related to the success of trading. How about leveraged versus unleveraged trades? I've talked a lot about this in many of the lessons throughout the course, but it bears repeating and reminding you. Here's a little story. In the old days when index futures trading was relatively new and everyone wanted to trade them, I would say, if you can't make money trading corn, you'll never make money trading the S&P futures. The same is true today. Corn has a very low margin and usually no dramatic swings, but often has very persistent trends. Now, you might not make much money trading corn, with a small position anyway, but you also won't lose much as you learn to trade. Now, if I were to recommend this today to a new trader, he'd think I was nuts. For that reason, most new traders don't even know anything about agricultural futures. Today, new traders have it even better, though, because almost every highly leveraged financial futures contract has an unleveraged ETF that follows the underlying tick for tick. There's the SPY ETF for the S&P. There's the GLD ETF for cash gold. So I've revised my suggestion to new traders a bit. If you can't make money trading an unleveraged contract, you'll never make money trading a leveraged contract. And that's as true today as it has always been. As a new trader, your job is not to make money, believe it or not, sounds odd, but your job is to learn to trade. And trading unleveraged vehicles like ETFs, it's a gift for the new trader, and it's a low-cost way to learn. And by the way, it's not just for new traders. If you're an experienced trader, but maybe it's a new market you're going to trade, maybe it's some new strategy that you've developed as part of your trading plan, what better way to test it out than on an unleveraged type of vehicle? So please, learn to trade with unleveraged vehicles. How about options trading? Now, I don't want to say options trading is for suckers, because some people make a good living trading options. And that success is rarely from simply being long puts or calls, especially those far out of the money. Buying far out of the money puts or calls has great appeal to the beginning trader because of the enormous leverage, but it's generally considered a real loser's game by most professionals. Money is better spent buying lottery tickets than buying far out of the money puts or calls. So if you're interested in trading options, get specialized options trading. Learn about all the different types of options strategies and decide for yourself whether that's really suitable for your type of trading. Also, you can't buy success. There's no charting program, trading platform, special indicator, proprietary black box system, or so-called rule-based trading program that will make you successful. Charting programs and trading platforms, they're just glorified calculators to crunch the numbers to give you the information you ask for to help you make decisions. You have to know what information you require and how to make a decision. Now, as you know, Elliott Wave is a big part of the dynamic trading approach to making practical trading decisions, but please beware of so-called Elliott Wave trading and charting programs. They can be very misleading in their wave counts and change wave counts rapidly as new data is added. They may be useful to the individual who's well-versed in the basics of practical Elliott Wave trading, but they'll never be a substitute to your understanding of market position and probable outcome based on practical Elliott Wave analysis and trade strategies. There's no system or indicator you can buy that will give you a successful trading business. It's that simple. Well, good luck in your business of trading, and thank you for allowing me to be of service to you throughout these courses.